did Bill Ackman influence a market dip? Did he profit off of any fear that he might have stirred himself? On the surface, it looks like Ackman did what can be deemed as something like a reverse pump and dump, where he shorted the market and then made a grim announcement in an effort to drive prices down. But is that really what happened? I'll go over that in today's video. Before moving any further, I have to emphasize that I am not a financial advisor. I instead survive off of likes, and I would appreciate it if you would subscribe instead of taking any of my video as financial advice and then suing because you took something out of context, or even in context, and then got burned by it. Lawsuits are bad, but likes for entertainment value are great. Now, what is a pump and dump? Traditionally, a pump and dump is when someone artificially inflates a stock's price by giving false or misleading statements and then selling the stock after its value spikes. For example, a famous person picks up 1,000 shares of a penny stock. The person then goes on TV or uses his or her large social media presence to talk about how great the company is when it really is incredibly unlikely to succeed. Trusting this famous person, the person's followers buy shares of that penny stock, driving up the value significantly. The famous person then dumps the stock by selling off at the inflated price that resulted from their endorsement. Pump and dumps, like the previous example, are illegal. They are a form of securities fraud, and the government wants to protect people from bad or misleading advice from powerful people. Since many people invest on pure emotion rather than with more trustworthy fundamentals, pump and dumps can really do a lot of damage. Now let's get to the main character of our story, Bill Ackman. Who is he? Bill Ackman is a billionaire hedge fund manager for Pershing Square. He's worth about $1.5 billion. A double graduate of Harvard, Ackman launched Gotham Partners back in 1992 and started earning a reputation as a savvy investor. A little over a decade later, in 2004, he founded Pershing Square Capital Management, which he heads to this day. He made significant money during the 2008 financial crisis by buying credit default swaps, which are basically insurance contracts that allow the holder to profit off of a borrower's default on that loan. He is a fairly unorthodox investor, sometimes severely underperforming, but lately overperforming compared to the rest of the market. Does all of this talk of investments and profits make you want to get out there and start investing yourself? Well, follow your fear of missing out and take a look at M1 Finance. I am affiliated with them and shamelessly want you to use them, and they do have a really nice platform, particularly for long-term investors. They're a free brokerage with no commissions. You create a portfolio by designating how you want all of your holdings balanced, and then M1 Finance automatically takes care of the rest. Fractional shares allow for serious fine-tuning of portfolio allocations. You can easily set up dividends to auto-reinvest towards underweighted areas. Not to mention, you can leverage your portfolio with a very cheap interest rate margin loan. Go ahead and look at them. Use my link in the description. It would make me so happy. Many thanks. So what exactly did Bill Ackman do? Ackman seems to have done a sort of reverse pump and dump, if it can be called that. Ackman had shorted the market, meaning he would make money if the market went down enough. This is done by borrowing shares from a brokerage, selling them immediately, and then hoping that the stock price goes down so that the investor can buy the stocks back at a lower price to then return them to the brokerage. The investor then pockets the difference. It's a relatively risky strategy that can be very, very lucrative. So in other words, Ackman was positioned to make money if the market went down. That in itself is fine. Many investors hedge their positions by shorting stocks or indices, and some do this with put options, like Ray Dalio did back in November 2019. I have a video on that I'll link above. Other investors may short stocks or might buy things like inverse funds that go the opposite direction that the market is going by leveraging positions and buying things like options. Just another tool that investors can use to hedge their portfolio. But the problem arose when Bill Ackman went on CNBC on March 18th in 2020 and declared the following.
I called the CEOs of a number of our companies, okay, and told them my concerns, okay, the companies we're closest to, and to stop the buyback programs, to husband resources, to draw down their credit lines, because hell is coming, okay? And I felt, it's really, I've never had this experience before in my life. The closest I had was the financial crisis where I'm saying, things are coming, bad stuff's coming. But this was a feeling like I've never had, like there's a tsunami coming, right? The tsunami's coming in. You feel it in the air, right? The tide starts to roll out, okay? And on the beach, people are playing and having fun like there's nothing going on. And that is the feeling I've had for the last 2 months.
In short, he gave a very grim short-term outlook on the pandemic and the economy and warned of much pain to come. That same day, the market dropped yet another 4% after his dramatic decree. Pershing Square ended up netting $2.6 billion on its short position when it closed it out just days later. As the news about what happened spread, the media expressed their outrage. As an example, punchable face Tucker Carlson aggressively denounced Ackman's actions.
It's easy to see why a lot of people in America are deeply worried about the state of our economy, and maybe nobody in the country has seemed more panicked about it, at least in public, than billionaire hedge fund manager Bill Ackman.
Okay, and my colleagues at work, okay, thought I was a lunatic. We need to shut it down now. America will end as we know it, okay, I'm sorry to say so, okay, unless we take this option.
America will end as we know it. That scared the hell out of investors around the world. It was everywhere. You probably remember it. Bill Ackman is suddenly much richer than ever. Just this Monday, Ackman made a net profit of more than $2 billion. He was buying stocks again, often at vastly discounted prices. How'd they get so low? One of those stocks was Hilton Hotels, the one he just told America 5 days before could, quote, go to zero. But that's the kind of person Bill Ackman is. He's an amoral greedhead whose behavior adds nothing worth having to our country and often hurts us. What kind of society thinks that Bill Ackman is a role model? We should ask ourselves that.
Whoa. Worse for Ackman, this is not the first time that he's been called out for trying to move the price of a stock to favor a short position that he has on it. Back in 2012, Ackman attacked Herbalife, calling it a pyramid scheme and saying that it was going to go to zero. He had a massive short position on Herbalife, which ended up surviving despite his attacks. He closed his position on Herbalife in 2017 after its stock rose drastically. This was partly thanks to enemy billionaire Carl Icahn's protection. But Ackman's attacks while he held the position could have easily been interpreted as another attempt at a sort of reverse pump and dump, where the attempt is to make the stock go down in value rather than up. But is the backlash justified? Ackman has repeatedly claimed that, quote, our hedge had already paid off prior to my going on CNBC, and that, quote, the idea that my appearance pushed the market down an additional 4% that day is absurd, end quote. He has explained that he was already in the midst of purchasing a large amount of stock, specifically in Hilton, Starbucks, and others, so he was largely bullish at the same time he made this announcement. Pershing Square is flat on the year. Ackman triumphantly has proclaimed that, quote, our hedging strategy worked. While we incurred mark-to-market losses on our portfolio equal to $2.6 billion, we made the same amount on the hedges, end quote. If Ackman was truly bearish and wanted to drive a market dip, one would think that he would have had a larger bearish position in the first place. Then his gains on the downswing would have been larger than his losses elsewhere. But that was not the case. Instead, his short position was used as a hedge and his portfolio came out neutral. However, others might argue that he wanted to drive prices down to make stocks cheaper to buy since his portfolio was already insured on the downside. Innocent or not, perhaps it's inappropriate for a respected investor to appear on TV to talk about the markets at all, at least without candidly disclosing his or her current positions. Even if it might not be illegal, it certainly is a terrible look. So what's the lesson here? Well, for one, our actions certainly have consequences, whether any backlash is actually justified or not. Now, from an investment standpoint, hedging an otherwise bullish position with something like shorts or put options can be very lucrative. Hedge fund managers do just that. They hedge positions. Volatility in either direction can turn into very large profits with sophisticated investment techniques. But when you become a billionaire, recognize the fact that your words will be under a microscope from the media and many other investors at the same time. Thanks for watching. That's all I've got for today. If you like this video, be sure to give it a like as it helps the channel out a lot. If you like this sort of content about investment strategies and what successful investors are doing to manage their portfolios, definitely check out my other video that I mentioned earlier on Ray Dalio and his put options that he bought back in November 2019 and how they paid off during this spring market downturn. Otherwise, I post new content on investing, real estate, and other personal finance topics every single week, and would love it if you'd subscribe. And what do you think about Bill Ackman's shenanigans? I'd love to hear your thoughts in the comments below, but until next time, take care.